All right, hello everyone. Welcome to another live trading session. Today is Thursday, 25th July, and we're gonna take a look at our account, market, put on another trade if we can, and talk a little bit about what's going on, answer any questions you might have, and let's do it. Let's start. Let's first take a look at the market. A little wild ride last couple of days. As you can see, we had a little pullback, then a little bit of relief, then another stronger pullback yesterday. Now we are getting a little bit of relief. How long it's gonna last, we don't know. It's certainly possible that this only lasts a day or two, and then we continue to go down. But we could also go sideways for a while. We have no idea. That's the whole point. We have no idea. We have to be ready for either scenario, and we at the same time we have to continue with our strategy, with our plan, in order to make our meet our goals, long-term goals. So we're not gonna pay too much attention to this, even though it's pretty obvious that the market is being on a little bit of a down trend lately, and that can certainly continue. So we have to make sure that we are not overexposed. We have some parameters, some metrics that we keep in mind and check in order to make sure that we don't overextend ourselves. And then we also have some countermeasures that we'll talk about. I put one of those countermeasures on yesterday, and it's still on, so I'll show you what it looks like, and then we'll talk about that other things as well. So let's take a look at the trade that I did yesterday. And as you can see, today we're having a nice up day, but this is nothing to get too excited. Yesterday the figure was down probably close to 3,000. So again, I've said it before, and I just want to emphasize that this is pretty meaningless. And with experience, you will learn that you shouldn't really pay too much attention to this. My little shortcut or trick, if you will, is to just consider every day that market is open as if I'm making 0.1% of my account balance, whether I'm up or down. So for example, if I'm around 70,000, I'm just in my mind, I made $70 today and yesterday as well, even though my account was down a lot more yesterday and then a little bit up today. That's all just a snapshot in time. And actually to show you a little bit, just kind of, because I know a lot of people follow me and some people in the Discord, and I know they're getting a little bit panicky because things don't look as rosy as they looked 10 days ago. So I just want to reassure everyone that this is normal and nothing to be worried about. We just can't let this influence our decisions, and we shouldn't succumb to the fear. If we're losing sleep at night, then we're overexposed. We need to cut down. We need to unleverage ourselves until we can sleep well. So as you know, I'm on my performance page here. I'm always following the netlick of the account, and that goes back a while. And this is the way I keep track over time of performance of the account. But at the same time, this is not always realized loss or profit either way. So a lot of people keep track of the realized losses. So I have a little tab here that's specifically for realized profits on P&L. And I actually did this mainly for people who want to employ my strategy, but only for the part of their account. So let's say they have a $100,000 account and they want to dedicate, 50,000 to the strategy. Well, it would be hard to just take a net lick and then be able to separate the strategy from the other trades that you might have in the account. So this particular realized UOTS tab takes info only from the inputs here in the UOTS and the hedges, and calculates only profits and losses from the strategy itself, but only once they're realized. So if I go here and I put in any date, I put yesterday's date because the formula will take a closing SPY price, and I can't get a closing price from today, obviously. So if I put a date of as of yesterday, the picture is much nicer than it is on the other side. My netlick is here in blue, and we're actually moving upwards overall, and the market is going down. Obviously, market is just basically a snapshot in time. It's always realized. So I don't really pay too much attention to this because it looks better than it is at the moment, obviously, because we're hurting, and if we are forced to close some of our trades for as a stop loss at the stop loss point, then obviously this realized will go down as well. So I don't get too excited about it, but it is important to keep in mind that even though the market's been down and we are hurting a little bit overall, we didn't really close any losing trades. And once we do, we are gonna try and close some either put debit spreads or some of the negative delta trades that we have in the account. So let's just talk about one of those trades that I placed yesterday. Let's go to positions, and that's the one that says in the money right here. It's a zebra trade, and as you can see right here, it's 2 long puts and 1 short put. At it was 58 days DTE when I put it on, and we can go more into the mechanics of the actual trade, but it's basically selling one naked put around at the money, and then buying two puts further in the money, and trying to get extrinsic value, plus minus come around 0, so we are not paying any extrinsic value for the trade. And trade acts similarly to a to a straight short future with a little bit protection to the upside. It's not a maximum loss to the upside. It's capped, so that's the main reason why you do it. But it's also sensitive to VIX. So if the VIX is increasing, the trade benefits, and if the VIX were to go down, the trade would start losing money even if the market doesn't move. So I prefer to put these if the VIX is not already too high, say under 20 roughly. There's no exact number, but certainly if it's 12, 13, 14, 15, I would prefer this trade. And then once we go with the VIX over 20, when there is a good chance for a VIX contraction, then I would consider just selling straight future, or possibly doing a hedge on demand from the trading plan. But let's take a look at this trade right now. So if we take a look here, so it's losing a little bit of money because the market went up today after we put the trade on. But we're not necessarily going to take it off right away. We're going to take a look at our metrics. We're going to do that next. Take a look at our metrics and go from there. So let's first start by filling up our. By filling up our trade here. And by the way, I'm assuming now this time everybody can hear me well and see the screen. I hope so, because I had a little issues earlier. Last couple of times. But feel free to ask a question if I need to explain something further. So let's go with today's date. Take a look at the VIX 1717. So pretty close to what it. Let me just take this out. Then we go for our 184 delta, 184 121, 184 121, 121. Then our Vega is 1040 minus 1040. Obviously our Zebra is contributing to these numbers, obviously bringing in some positive Vega and some negative delta. So something to keep in mind. Also lowers our buying power requirement a little bit. So 31, let's just refresh in case, 31.1. So not a huge change here. And then our, where is it? 14.01, this is our leverage. I have a couple of different ways I measure leverage, because it can be a little bit misleading if you just look at one thing, if you just look at the actual leverage exposure, notional exposure, it can be a little bit different from the actual units at risk. So that's why I do it like this. And also, let's take a little peek right here. 69,340, 69,340. 69,340. 40. Okay. So you can see here the delta is 27, which is now acceptable. It's on the high side, but it's acceptable. Remember, once we go over 0.35, we want to strongly consider doing some hedges or negative delta trades, which is what we did. But right now we are fine. And then our buying power, 31%, that's in line. That's even less than 2 times VIX. And we have $17,700 per unit of risk. This is now a little bit on a lower side than what we used to, but this number is a work in progress. I'm not sure yet what the optimal number will be, and that number might well depend on the VIX environment as well. So I'm playing with different numbers just to get an idea and see over time how we react with different leverage types to different situations. So I'm not putting too much emphasis on that, but certainly something I measure. And then another thing I do look at is our full book wipe loss, and this is if we were to close all of our trades at a full stop loss at 200%, all of our open trades, if they were to be closed, all together, basically, that would represent 20% of our net lick. Now, this is before any put debit spreads or any or any negative delta trades kick in. So it's not necessarily that we would lose all of that, but also at the same time, in such an extreme scenario, there would also be slippage, and we might miss some of the 200% exits. So like we could also get a little bit on that side, even though we're getting compensated on PDSs and things like that. But still, we want to keep this in mind, because one of our mandates is to keep our MAR ratio at 1 or above. And if our long-term CAGR is 20%, that means we don't really want to expose ourselves to a more than 20% drawdown at any given time. So we're getting close here. So we can maybe consider putting on a trade because we still have some of the put debit spreads that should cover that and keep us in 20%. But we're up there. We should look into trying to close some trades. So we have a choice. Maybe we can close some of the positive performing trades. Like, let me see if we have anything in this expiration. We have this one at 47 points. So we might consider closing that one, even though it's not at full 60%. But what we want to do is, this one is 36. This one is at this one is slightly negative, and then the rest of them are gonna be more or less negative. Let's see which one is the worst. 46, 50, 60. Okay, so this looks like the worst trade at the moment at 92%. And okay, so we'll probably put on another trade. Now there is a little bit of a dilemma, and something I'm looking into, because nothing is set in stone. The strategy evolves as we get data, as we try different things. I do little changes. So one of those things is, last time the market went down similar to this, I stopped adding new trades at some point to keep the metrics above the threshold. And that was fine, obviously. It worked fine. However, we missed out on putting the scheduled trades on at a favorable time, when the VIX was elevated, when we would get more money per each unit at risk, and those units of risk would be further out and less susceptible to the huge spike in a VIX, because it's going to be harder for VIX to spike from 18 than it is from 12, or the spike will be less percentage wise comparing to itself. So last time I did that, I stopped trading until the metrics were back in line, and I said next time this happens, I'm gonna try and put the trades on through this, so long as the metrics allow me to do that. And even if I have to use some of the negative delta trades to bring the metrics in line, I'll do that. So we're pretty good on most metrics except for the wipeout book loss. So that one will get a little bit stretched once we put a trade on. So I'm going to count on the put debit spreads to help in that case and still keep us at 20%. You have to keep in mind, we have to be able, not that we want to at any point in time, we don't want to have a drawdown of 20%. But we have to be mentally ready, and that means actually, it can happen. So we have to talk about it as if it's a real possibility at any given time. So it shouldn't, it shouldn't distract us from what we're doing. Now the market is going up slightly. That means our zebra is probably losing a little bit more money. But once I put this trade on, our metrics are going to be a little bit stretched, and we're probably going to need that zebra to keep us in line. So let's take a look. Let's go ahead and put a trade on. Again, I'm fully aware that market can go down tomorrow, and usually whenever I put a trade on, the first move is to the downside. But I learned not to worry about it too much. So with the VIX in 17 handle, we are looking again at 11 delta roughly, and then for the put debit spread, we're looking to do something around, you see, on the high end, so somewhere between 25 and 20 towards 30, somewhere in this neighborhood. So let's go ahead and see what the market is giving us. If we go to MES, we go to trade. We're gonna go to this 113 again. We have one trade here. This one is now 15 delta, and so if we go right here and let's see quantity, so this is giving us 380, 573. So okay, we'll try and get this full value, and then if not, then we'll just go to activity, replace, get a little bit less money. Let's see if this should close. No, market is moving up, so it's harder to get it. So, all right, let's give it another quarter, and that this should close. So let's. We're gonna wait a second. We don't wanna just keep accepting less and less. We can move the strike around. We can go down to 10 delta, see if there is better liquidity, slightly more open interest, 4,800. So I think we might as well do that, because this is not giving us. So let's cancel this one. You see, I don't want to be too strict about these deltas. The plan calls for 11, but if we go for 10, that's perfectly fine. So quantity, we go, what would I do? 4,800, and I go for 3 of them. Yeah, 517. Let's try and collect that, and then again replace, and this should work. Yeah, 34.25. Let's take a look at the calculator. 34.25 times 3 times 5, and then times 0.2. So 102.75. So minus the commissions, we're probably looking at around 90 bucks that we want to spend on a put debit spread with delta at around between 25 and 30. And we want to go, this is one thing that I think I'm going to be adjusting in the plan pretty soon. and that is to go closer to the money, around 60 days. So in this case, maybe even 57. Get a little bit more reactive protection that's closer to the money and has a smaller, lesser DTE, higher gamma. So let's take a look here what we can get. So 20, let's look for something, some round number, or 25 increments usually works. Okay, so this is pretty good, 85. We could get that. We probably have to up the payment a little bit to get it closed. And this is now 100 wide. Yeah, let's go ahead. Let's just give him a quarter to try and close it. Even that is not going to be enough. So place. Let's give him, and we're still within our. If the liquidity is not too strong. Again, if we have to, we'll move down to 60 something DT right here, or to 56. Maybe that will work better. Let's do that. Let's go to activity, cancel, trade 56, go to 20. Let's see, this is nice and round, but it doesn't really matter. Let's just go here and see what we... So this is again 100 wide. Let's see, like this. All right, cool. We closed that at this filled at 17. So let's go ahead and fill the spreadsheet. Then we'll come back, take a look at these numbers, and make sure that everything is good there. So this is going to be trade 86. We do MES, today's date, VIX at opening 1672. So it's contracting a little bit. I think we did 10 delta, 4800, I want to say, but let's double check. Let's just be sure. Go here, 4800, 3425, 425 we got, and it was 113 days, and we did 3 of those, and then we did one put debit spread here, 5310, 5210, in a 56 DT. Let's double check. 53, 52, 57 it says, but let's see, September 20th, and we paid 17. September, let me just do this real quick. So this is incorrect. So 57 and 17 even we paid for it, so minus 17. We did one of those, and we did here one of those. We forgot to put that on. So this is what we got. So this is all completed. And if we go back to the main page, we will see that according to this, last premium collected 514. Netlick, now Netlick stays at the higher point, the highest point here on the sheet. It doesn't move down. We want to keep up with our highest here for the schedule in order to keep up with our CAGR. But if need be, if this discrepancy becomes too large, we can lower it down to current rate to make sure we don't over leverage ourselves. But we already have measures in place for that. So let's take a look now. So we have to correct these, all of these things here. 1669. Our delta now is going to be, just a second, 180, 121. 180, 121. So not too much changed here. And the minus 1036. Minus 1036. Now buying power. I'm sorry, oops. We need to go to positions. This, refresh it. 31.5. That's only slightly higher. 31.5. Notional to net lick is now 1490. 1490. And then this is going to be 4.2 now. This is probably the highest we had when it comes to leverage against the units at risk. It's also pretty high on here as well. Obviously, it should go in tandem, but this is what we want to keep an eye on to see how many open units at risk we can have, or actually how much net lick we should have to fill and be safe with net funds per net open unit open at risk. So 4.2. Okay, we'll see how that works. And our metrics delta, it's in line 26. Market moved up, so the delta went down. Buying power is in line. That's fine. And then units at risk, this is getting slightly down, but I think for right now, I think I even put somewhere here that no, I put 18. I'm testing different things, so we'll leave it at this. We're not gonna close any trade now until it reaches 60%, unless we are forced to. And given this market move to the upside, there is a slight chance that we might be able to close that. Let's find that trade. I'm sorry, is it 67? This one is at 50. So no, there's still a little ways to go. But if market gives us another day of up movement, then there is a chance we can close this one. But we're not going to rush. We do know it can go back down. So it is what it is. We are looking okay for the moment. We don't look overexposed, and you know, we put on another trade at a favorable time with a elevated VIX. So if the market starts going sideways or recovers a little bit, we'll have plenty of data to recoup over the next couple of weeks. But look, the market's been acting very strange. There doesn't seem to be a particular rush to go to all-time highs anytime soon, although we could. So a little bit of a sideways action would be welcome, or a little bit slow move to the downside would be nice, so that we can potentially cash in on some of our put debit spreads without hitting the stop loss. So that would be ideal. But yeah, that's it, guys. Unless you have any questions, I think I'm gonna call it a day here, and then we should be putting on another trade Monday, the 29th. And as always, we'll do it live right here. And that's it. Oh, hold on, let me try this again. All right, like it. If you found any value, please make sure you like the video, and then we have another one. Consider subscribing, as then you will get notified whenever I post new videos or schedule any live sessions. So thank you very much. I will see you later.